Trade of the day here, a downward facing triangle on dollar CAD, connecting the highs since July the 14th with a steady low at 125.85. Currently testing the higher end of the triangle as a break and close above it will render the formation mute. Oil prices might be coming to play once again on the pair, but only to a small extent. Sell dollar Canadian from 126.15, take profit at 125.85, stop loss 126.30, risk reward ratio at 2. Is that something that you would be able to consider, Mr. Stretch?
Well, I think the 125.80 area I think is an interesting one because we've stopped around there in the last two sessions. So I think to suggest that we should power through that on the downside, I think is a little challenging. So I think, yeah, certainly looking at the sort of the take profit level, that makes sense to me. I think it is an opportunity where people will look to sell rallies in dollar CAD in the short term because, of course, the Canadian perspective is very different to what we're seeing elsewhere because, of course, the Bank of Canada have hiked rates, and we assume that there will be another hike coming in October. So it is still the case of selling dollar CAD rallies. I think still makes some degree of sense. Although actually, I think you might be wanting to look at some of the other pairs. Maybe CAD yen as another way to play it, taking the US dollar out of the equation.